Hi, I'm Tim. I'm the economic forecaster, and this is a market summary for the week of May 15th, 2009. First, I would like to talk about the bond market. The 10-year is sitting at about 3.12% after the Federal Reserve has already purchased over $100 billion of our own debt. The 10-year was sitting at about 3% back in mid-March when the Federal Reserve announced that it would be buying upwards of $300 billion of our own debt. Is quantitative easing working? I don't think so. I believe the Federal Reserve would like to push the interest rates on the 10-year bond back below 3%, but the bond market is saying otherwise. And I believe we're going to continue to see rates rise on the 10-year. We should probably be north of 3.5% the first part of summer and probably around 3.75% to 4% by mid to late summer, unless we get a bond market dislocation, in which case rates will shoot up very rapidly. Financials have continued to sell off this week. Bank of America is down about 30% from where it was a week ago. We had a broader sell-off in financials pretty much across the board, and I believe we're going to continue to see weakness in the financials in the weeks to come. Some interesting news on some insurance companies. It looks like some of the insurance companies have cleared the hurdles for receiving TARP money. The Hartford Financial Services Group said Thursday that it had been notified by the Treasury Department that it was eligible for $3.4 billion of TARP. Lincoln Financial Group said it had been cleared initially for $2.5 billion. Allstate, Prudential, Principal Financial will also be receiving TARP money. The total capital injection into 6 companies will be about $22 billion. Now, if you are holding an annuity, this should be a big red flag to you. These insurance companies are undercapitalized, and now they have to come to the Treasury in order to borrow money. Okay? When you buy an annuity, the bank or insurance company invests your money and agrees to pay you back according to the annuity's contract terms. The annuity can be part of a long-term saving plan for retirement. Like mutual funds, they are not insured by the U.S. government or by the bank where you buy them. Okay, I am not a licensed financial planner, but if I were holding an annuity, I would get my money out and get it out now. Okay. J.C. Penney and Company said Friday that its first quarter profit tumbled 79% because of big pension expenses. Now there's a common thread between that story and this next story. The nation's largest publicly traded trucking company will ask for $1 billion in aid from the federal bailout fund as creditors come knocking and business continues to sink. YRC runs trucks under the names including Yellow Transportation and Roadway. The company also has substantial pension obligations, estimated at about $2 billion from a multi-employer plan. Okay, what we're seeing is we're now seeing problems with pension funds now with these companies that are eating into their profits. They are undercapitalized. Okay, when you see pension plans blowing up, it is because these companies don't have the capital to continue paying them. See a common thread between that? Okay, not enough capital to cover pension plans. Okay, and remember the subcomponent of a real economy, transportation. Okay, when we're talking about the nation's largest trucking company is in trouble and on the verge of going bankrupt. Okay, that again, that is a subcomponent of a real economy, transporting goods and services. Okay, this is not a good sign. One other thing I wanted to touch on is the Chrysler dealers that were notified yesterday about mandatory closure due to bankruptcy restructuring were not happy. Okay, these dealers are independent companies that are being forced out of business, many of which will have to file bankruptcy themselves. They will have to liquidate inventory because there are no buybacks from Chrysler. In other words, the inventory that they have on their lots, they have to liquidate and sell that. They have no other recourse with that. And once again, this bankruptcy and that of GM will have big impacts on the purchase of corporate bonds in the future, because the capital structure is very important and it is not being honored. Okay? If you are a bondholder, if you are a senior debt holder during a bankruptcy, you are supposed to get paid first. That is not the case with these bankruptcies. Okay? The courts are not honoring the laws. This is a big concern. Okay? You have to be crazy to hold debt of any company that received or will receive TARP money. Things just keep getting more and more interesting, and I plan on making another video here very shortly, because there has been a lot of talk in the markets and on YouTube about purchasing gold for the possibility of hyperinflation, but there is a lot more to that you need to be aware of. Okay, and I'm going to be making a video probably tomorrow on that, and I'll cover investments in precious metals and things of that nature. So thank you for tuning in, and I look forward to your comments. Thank you.